The stock market started the month of December in a dramatic fashion. The S&P 500 printed a hangman. Will this hangman take the S&P 500 up the channel or down the channel? Last week, the S&P 500 had a one heck of a week. It actually pulled back. On Tuesday, it made a weekly low. Then it recovered, close out the week with a gain. S&P 500 did not close at a new closing high. And we'll take a look at that on the daily chart here. As you can see, the daily chart on November 27 closed at a new all-time closing high at 3153.63. And the intraday high, all-time intraday high is 3154.26. And on Friday, it came up and closed at 3145.91. The intraday high is 3150.6. So although that it closed the week with a gain, but was unable to make a new all-time high close. And with the the non-farm payroll positive number that actually pushed the S&P 500 or the market with a gap up on Friday, with a very strong Friday, but is still unable to take out the all-time high. So we're going to keep an eye on to see will it be able to take out the all-time high in the coming week, or will it continue to maybe pull back and digest a little bit of the recent gain and close out some of the gap here. There's a gap here. Right, there's a gap here and there's a gap here. So maybe we see some of these gaps get closed in the coming week. Before I continue, I'd like to ask you to smash that thumbs up icon to help me break the YouTube algorithm and to support my channel. Click the subscribe button if you have not subscribed to my channel and help me reach 1,000 subscribers. Thank you for your support. Looking here at the sentiment chart, remember we were talking about the fix is watching for it to expand upward, and also looking at the put call ratio to start make a turn. Then we will see a pullback, and you can see that it came up and peaked somewhere around 16 on the VIX, and also the put call ratio came up to near the 0.88 level, and you saw that the S&P 500 pulled back a little bit on Tuesday. Look at the new high, new low, the New York Stock Exchange new high, new low versus the S&P 500. You can see that the new high, new low went negative. That means the new low is outnumbered new high on Tuesday as the S&P 500 pulls back. Right now, it came back to be positive with more new high than new low. And it is getting up near this peak here as the S&P 500 is trying to move back up to the prior high. So we are going to keep an eye on to see what this continue to expand upward as the S&P 500 continue to make new high. And for the advanced decline, the AD line seems to be coming up to the prior high, in which the S&P 500 made a all-time closing high there. So again, similarly to the new high, new low, we want to see how the AD line react as the S&P 500 continue to make a new all-time high. So far, all the market sentiment and the internal telling us that the market is still holding up and everything's still in a positive upward direction. So we will take a look at the ETF and see what kind of price action we could expect for the coming weeks. Look at the SPY here, got the composite volume profile here on this swing from the low up to the recent high. You can see that there is this high volume zone here from last Friday. And we can see that next week, I'm essentially looking for either going to break out of this balance, this high volume area, and then move up, toward that 320 area, or it's going to come down and fill up some of these, this gap here, and put in some volume here, fill out this distribution. Then we'll see would it be able to hold this support here in this high volume area. this 312 area, then basically looking forward to come back, work itself down and fill up these gap and also fill in these low volume area. Even if I shift this composite and start out here, just right after that peak there, and you can see that the high volume area is pretty much the same. So basically looking at the similar price level, the price zone, to see would it be able to find some support either near this 312 or come all the way back down here to this 308. For the QQQ, we also did the same thing. I basically generate a composite profile on the low here to Friday. See, there's this high volume zone here, and essentially looking for this thing to either move up toward the high, and I will show you later there's a high volume peak here, so that could be a potential resistance up here near the high. So either we're going to break above that or going to come down, and just like the spider, basically looking for it to come down and fill this low volume zone here. And there's this composite point of control at 202.50. So we're basically looking for that to see would it be able to provide some sort of support, but certainly you're going to act like a magnet that will try to pull the price down toward that level. And we'll see would it be able to find some support on this high volume zone. If it can't, then essentially you're looking for these areas to get filled in and possibly work itself down to the 200.42 area at this high volume area. Now we're going to take a look at this, and if I pull the composite up to this high here, and you can see that there is this high volume node somewhere around 206, essentially 205.95. So near that 206 area, if the price come up, we could see potential resistance up here at the 205.95 area. Look at the Russell 2000 ETF IWM. If I also do a composite volume profile from the low of Wednesday to Friday, you can see that also there is this high volume zone here from Friday. And I'm basically looking for this thing either going to break through and come down and fill this gap here and put in some volume here to fill out the distribution, this low volume area, or it's going to break out of this and move above the composite value area high, which is the 163.35, somewhere around there, and break above that, then move to a higher level and seek the next high volume area. If it come down, we also see there is a composite point of control here, 161.05. So if it could find support here, then we'll probably see it come bouncing back to this low volume zone here and fill out a little bit more of that distribution. Otherwise, it'd be looking for this thing to work itself below this value area low, the composite value area low at 160, and work to this little gap here and come down to this area, 159.71 area. And also if we shift this back, say we do a composite from this peak here, and that also kind of give us a move the point of control, the composite POC up at this level near the 162.75, 162.78 area. And so it's still, again, we want to see would it be able to find support on this point of control and push us up and get above the value area high, the composite value area high at this 163.37. Otherwise, we're basically looking down and fill this gap, and also just basically fill this low volume area. You can see that the low value area, low volume zone is not that much different, only the amount of filled in would be a little different, and the high volume zone still pretty much the same. And this composite shift the value area low up to this level at 160. So we're still looking at this thing to break through if it can't find support in this high volume zone down to here into this gap somewhere around 160. And if you can't find support to bounce off at this low volume area, then basically looking for the price to come back down to this 159.73 and find some chop down here at this high volume area and possibly fill out a little bit more volume.